Hello traders, Gary Wagner here just before 10:30 in Honolulu, 4:30 in New York on Wednesday, April the 20th, 2016, and we're looking at the Dow Jones Industrial Average managing to stay above 18,000, I believe for now the third day in a row, 18,096, putting it up about 42 points on the day. Now, Standard & Poor's did not have a whole lot of movement today, but it did close up 4 points higher at 2098 on the day. So as we mentioned on the gold forecast that I just finished recording, a lot of the momentum in both the precious metals markets as well as the equities markets was this tremendous spike in crude oil, closing up about $1.55 a barrel higher, 42.63, up almost 4% on the day. We had this prior top which sat right at 42, and we can compress the chart where you'll see 42 has technically provided some historical references both as support and resistance, but we've certainly taken that price point out today. And so traders, as I said, 42 is really an important number. If we go back to really last year's trading, let me get this straight across, excuse me, but you can see where 42 played of critical importance back in March of last year. This was where the market had fallen to after being at about 54 a barrel, drops to 42, and that's when it came up and made these highs that kind of meant a benchmark at $60 a barrel, because at this point it was really lower pricing ahead for the better part of a year. So traders, no doubt, a fairly small but nice upside move in the Standard & Poor's. Now we're looking at the E-mini because the Standard & Poor's, the big contract, is trading substantially higher than this, but we're at 2097.75, up about 3 to 4 points on the day. When we take a look at today's activity on our daily chart, let's go ahead and kind of blow this up a little bit so we get a better idea of what we're talking about. But you can see that in terms of the activity on the day, it is a green candle, but it does have a higher high and a lower low, which means it really closed in the mid-range of the trading day. And my sense is I am looking at this particular rally as really having the potential to take us over 21.22, which is really the peaks that we saw back last year. So we're not that far from it, but my reason for hesitation right now in entering along is the fact that when we look at these series of tops, and they came in November and December of last year, they came in just prior to this major secondary meltdown that concluded our retracement. When we take a look at that particular price point and carry it over, as we've just done, what you'll see is that the high, in fact, has gone into this area, this price point, but it is closed below this price point, even with an up day. And so as I said yesterday, I really need some concrete technical evidence that we can sustain the market above, call it 2100, and I'm more than happy to enter a position from the long side on a break, a solid break above this price point with a close above this price point. We're long in this market. We are buyers. However, if we see this market falter or stall right in this area and then begin to track back lower, well, that tells me we could have a good short play on our hands, but at least we won't be long in the market. We will look for some sort of correction. So we'll have to see over the next couple of days. We've only got a couple of days left this week. It is earnings season, so we'll have to see how this all unfolds and whether or not U.S. equities have the ability to continue this tremendous rally, which really began middle of February of this year, but this tremendous rally, and whether or not this rally will take us to new all-time high. If you recall from Friday's show where we were looking at the dollar, or I believe we've talked about it or touched upon it at least once this week, our $64,000 question, so to speak, was whether or not this level at 94 on the dollar index would be a level that would hold, because there's no doubt about it. And that is that since mid last year, this is October, of course, of 2015. So since the last quarter of 2015, we had the market really come off of this flat area. This is the supportive area of about 94, and it comes up and actually tracks to a high of 100 on the index, which really comes in and matches this former high that we got in February of 2015. But from there, this market, the dollar index, has been dramatically trading lower with a series of lower highs, a series of lower lows. It's absolutely a market that's moving to lower ground. Now, once we hit this 94 price point, this was the logical area, and still is, by the way, to look for some support in the market. Now, as you can see, even when the market tracked and found support in this area, it actually did manage to, on an intraday basis, or on an intraday basis, actually trade into 93. So as long as we hold in this area, meaning 93 to 94, I believe that we have a real chance to see a continued support or base being built in the $1, and two, the ability for the dollar actually to move to higher ground. However, if it breaks below this price structure right here at 94 and significantly at 93, well, on a technical basis, this market could go anywhere because there's not really any area to look at. You've got one little area here at 92 and then another area here at 88. And so you don't have any real technical data in between those price points, meaning right here or right here, that is significant enough for me to say that's where it should actually find support. And that being said, we're at a real critical area in the dollar. I personally think we will find support in this area. We got a nice bounce. Whether or not it can hold that rally it saw today and we can get a sustained move up in the dollar, well, that's another question. But I am looking for the dollar to find support in this area. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.